YouTube, what is good? It's a little petty coming at you guys with another stock market episode. Stock options trading, thinkorswim, 500% plays, mispriced options. Let's talk about it, man. Let's get into it. So what we're going to be talking about today is the play on JD. Also, we're going to talk about the play on Tesla. Now, as you can see from my after hour notes from yesterday, this is what we were looking at prior to going into the market today, this morning. So we put notes together at the end of the trading session. So when we wake up in the morning, we already have somewhat of a game plan established. Now, let's look at the notes. So JD is bullish, still has the gap to fill from earnings. It could pull back. Tesla, big drop in after hours. Could be a nice play with news catalyst. Have to check the option price in the morning. Look for the gap down and might find mispriced options. So let's go to the charts. Let's start with JD. So as we seen yesterday, JD had its earnings and we were looking to fill the gap. It came down yesterday and then it started recovering. In the after hours, so it closed yesterday at $28. Let's just round it up, $28. It opened up today, it gapped up. So we were looking at the 29 calls, 28.50, 29 calls. So we're gonna show you right here. These are the 29 calls. Now, these are the 28.50s. Let me show you the 29 calls. Now this is a mispriced option. As you can see, like I said, JD gapped up basically in the morning. These closed yesterday around 4, 5, 6 cents. They closed around 4 cents and they opened up at about 8 cents. So you're basically paying $8 to get in the money by today, $1. Now if you go to the 28.50s, these ones showed a little bit more of a, not a misprice because it was closer. So these gapped up a lot harder. So these two contracts were in play for calls. So as you can see, when JD gapped up in the morning, it came up, had the 1226 bullish, the 12 EMA line held support, and rest is history. So let's look at it. We could have bought the 29s. They opened up at 8 cents. They came down to 4 cents. So 4, 5, 6, 7, 8 cents in this range. Now JD went on a bull run, so this is what the option price did. So it went from here, it went up 4% on the option price, on the stock price. The option price went up 1,000%. So this is why we like to trade options. We like to trade options because we can keep our risk tight with the potential of larger rewards. So that's what I like to focus on. This play, we actually did end up taking a play, but it was on this call. Let me show you guys that right here. So as you can see, we bought the 28.50 calls. We bought 2 of them at 16 cents. And then we marketed out at 7.07 for 69 cents. So that was almost a 300% play. Now let's talk about the Tesla play. Let's go to the Tesla play. Now these options were definitely mispriced. Tesla. So let's go back to the notes real quick. Tesla, big drop in after hours. Have to check option price in the morning, because when the stock drops in the after hours, we don't know what the options are going to do in the morning. So we have to wait and figure that out. So let's look at the options table at Tesla. Tesla closed yesterday 320. Went up to 323 in the after hours, sold off with news catalyst, opened up at 307. So let's look at let's look at the three. I also want to show you guys this. Could fall, mispriced option support 305 could fall to 295 or fill the gap back to 395, 325. So the way I was looking at this was I was looking at Tesla can basically, it had support around 295. So, and as you can see, it came all the way down to 292. So my game plan in the morning, I was looking at the 295 puts. And as you can see, they opened up around 50 cents. So, and this was actually basically a mispriced option too, because they closed yesterday at around 30, 50 cents. They ended up opening up on that gap down. They only opened up from 50 cents to 80 cents. That is, and the gap down was a very big gap down. So you were paying 80 cents basically to get in the money by from 308 to 205 to 295. That's a play that we can obviously, yes, it's a play that can happen. So this is where we come to the options table and we look. Now, if you look at the 305 calls, the 305 puts, you can see the gap. It made that gap. So they closed yesterday at 116. They ended up opening up at 315. So that's not a huge gap, but I want to show you the put side because the put side is really going to tell you the big difference. I'm going to show you the put side. How these were, or the call side. When you go to the call side, you're gonna see the big difference in the gaps. So that's obviously how it's a mispriced option. So let's look at the 315s. Now, as you can see over here, they closed yesterday at $8. They gapped all the way down to $1. That's a huge swing trade to be losing, to be holding $800 of a one contract, and then wake up and it's going to be at $1. So you can see how the put side was in our favor today as traders. I think that's all for this video today. So, oh, you know what? Let me show you the play on the 350s. I want to show you the 295s. So the 295s, they ended up opening it up at 50 cents or 80 cents. No gap. So this was a mispriced option, and as you can see, the option ran all the way from, say you wanted to buy Tesla on, you could have did the VWAP fade, you could have played the opening break with the bull cross, got out here, so that would have been from there to there, that was 80 to 137, 78%. Comes down, and then it goes all the way from, like I said, 80 cents to $6. So that was a 1,400% play, 1,500% if you got it at the top. You could even have sold down here when the stock started making a small reversal, $200. So from 50, $80 to $200, $300, $600. Little petty, man.